Hey, what's going on, everybody? It's your boy Skag here, and today I'm bringing you guys a little bit of a case study video. This was actually something I was putting together for the Academy students, but I actually think this is such a good case study that it's actually worth putting out right here on YouTube as well. But I want to give just a small disclaimer. The stuff taught inside of this video, right, the concepts we're going to be talking about, unless you're already familiar with smart money concepts, Wyckoff logic, supply and demand trading, you might find some of this stuff in here a little bit advanced. You should still be able to pull some great value from it and use it as an example of things you can look for in the future. But understand that this is tailored to the person that who knows a little bit about the strategy, the way we trade, the stuff that I teach in the academy already. So with that being said, let's actually jump right into this. Like I said, we're looking at USDJPY. And the reason I wanted to bring this case study up is because it's, again, just a great example of what we call a type 2 distribution schematic, which basically means that it's a point in the market where supply began to overtake demand, which actually led to bring some really nice short opportunities on USDJPY. Now, we're currently looking at it from May 10th because May 10th is when I alerted the Academy that there was a potential shift in supply and demand happening. I'm actually going to put the screenshot of the messages that I sent out on May 10th on the screen here so you can take a quick look at that. But what I was basically alerting everyone to is that shift in supply and demand. And this was also a day before the most recent CPI numbers came out. So I was also kind of alerting everyone that CPI may give us that what we call a phase C trigger, which is like one of the last triggers we need in order to begin taking trades to the downside in this type of market environment. So as you can see, again, we called this on May 10th. This is more or less kind of where price was, give or take maybe 1 or 2 4-hour candles. But this is the setup we were looking at. So let's kind of break this down, and I'll show you some of the reasons why I was looking to the short side on this, why it worked, and some things that you can look for in maybe future markets to come to some of your own conclusions and hopefully spot your own opportunities. Right, so kind of just taking a look at this, UJ was in a very strong uptrend, right? We knew that, so we wanted to be, very careful with how we were entering the market and handling the sell side here, right? We wanted to get the best risk to rewards possible. We also wanted to make sure that the data was accurate, right? The stuff that we were looking for was clean. And we're really just kind of assessing this range up here, right, between the 128 and 131 levels on the 4-hour chart. And if you're going to just take a look at this on a basic level, right, just with inside of this area here that I've highlighted, right, there's a few things that you may notice from just a basic understanding, right? We see a break of structure here. We also have a new kind of high, a breach of the high here. And I want to kind of bring your attention to what happened at both extremes inside of this range and how us as Wyckoff and supply and demand traders actually were able to spot the incoming sell-off. So for my Wyckoff traders, I'm going to just kind of mark this out real quick in terms of the schematic events. If we take a look at this leg up here, you can see as we kind of came to the peak, we had a little bit of an equilibrium on the buying and selling side, which, as you know from the academy, will start to signify that maybe potential range is incoming. Now, that alone is not enough data, but at this point, we already had all of this data in the market. So we were kind of looking at this as our buying climax here. I'm just going to lower this text real quick. All right, so we had our buying climax here. And then just to kind of mark out the rest of the range real quick, you have the automatic rally and in-range ST. And then we get to over here where we get this break of structure, right? A lot of people look at this, they call this a break of structure. Another word we use inside of the academy is change of character. But very specifically in this type 2 distribution, what this really is a sign of weakness, right? We label this as an SOW, which stands for sign of weakness. And that's not only just because of the break below this previous structure point here, it also has to do with the volume associated with the move, right? We clearly broke structure below this point in the market, and we did so on what we call higher effort. When we talk about higher effort, we just mean that the sellers were really committed to bringing it down, right? They really were executing on more orders, more liquidity was added to the market to bring price lower, and that is a sign of true intentions. Now, at this point, the typical route that most people will go is they see this break of structure, and they're going to look for some sort of pullback to enter that market. Now, as Wyckoff traders, we know that just a sign of weakness is not enough data, and that's actually what we call a phase B or an early range kind of move, right? It is a sign that weakness is coming and that weakness is present, but it doesn't mean that price will immediately kind of move down. And I'm sure there were some traders who got kind of caught up in this. Maybe some people were trading, some sort of Fibonacci retracement, maybe even some smart money concept traders were maybe looking at the potential order block in this area as somewhere that you can sell from. And if you notice, yeah, this acted as a little bit of an area of supply. Price did kind of fade off on the smaller time frames here. There might have been some lower time frame structure and reactions that people maybe entered on or got scalped on. But because this is in the middle of the range and it's still technically early in the range, this idea didn't quite work, right? Now, again, we already had this data when we were looking at it on May 10th, right? We had all the way up to here. So let's kind of keep looking at what happened. Now, again, we had this strong effort from the sell side, which gives us that first sign that, like, okay, the sellers are looking to take control, right? Where can we get into the market? And we only had this one test to the high, right? So we were entertaining the idea of possibly looking for reasons to sell at the top, right? We wanted to see how the market reacted, what kind of data came in up there. And if we take a look at this move here, right, I'm just going to highlight this move after the downwards move. We just look at this entire move in the blue box and we just drag this down so it actually also incorporates the volume, right? We're just looking at this area here. If you notice the effort after those sellers put in all of that sell effort to bring it lower, the buyers didn't really try to compete at all because they're not that present. Yes, price is moving up. Yes, price is breaking in range structure, right? It's erasing this move. It is giving some sort of bullish order flow. But the effort behind the move really shows the true intentions, right? So we take a look at this, and I'm just going to draw some arrows here to some of the bullish volume, right? You have this bullish volume, and then the volume here at the high, and all of it is declining, right? The buyers are getting weaker and weaker as it moves up into this area. Now, that doesn't mean we can just immediately go short. Of course, we want to look for other reasons, other candles, areas of interest, patterns to play off of. So what we have, right after we came up and we did this on that lower buying action, we can see a few things that kind of formed up here. One being this like 4-hour order block. And again, a lot of these sell moves here were happening on more volume than the buyers had. So again, you can see anytime selling action did come into the market, the effort was greater. Granted, not as much as the sign of weakness, right? Because there's not really going to be that much effort put in as things are kind of working out. But as price begins to move down, we can expect and hope to see that selling action kind of continue, right? So at this point, we were looking at this market. We knew that we had CPI the next day. And I kind of just knew basically looking at this little smaller range, what I already wanted to do, right? I wanted to look for a little bit of a wipe of this smaller time frame liquidity back up to where the sellers took the control. Again, this order block remained an area of interest. So we're looking for sell action above this range, right, at 130.50. Preferred entry was upwards of 130.98, right against 131, but we were looking to take any sort of spike above the 130.56 area, and more importantly, maybe not the spike above, but as we started to close below and reject from here, we were going to go full sell side. And again, a lot of this comes from the cycle that we see, right? We see the distribution forming, we see the sign of weakness, we see that sellers are present in the market, we see that buyers after that point are actually becoming weaker and weaker. We see rejections from the high, and we start building out our plan. Now there are a few different forms of distribution, right? It could have still spiked up here, again, on declining bullish efforts, and what we would have had from that point would be like a type 1 distribution, if you're familiar with what that is. If you're not familiar, that's okay. You guys can search this stuff up. You guys can go to the course, to the academy, and get that information. And what we were looking for, again, just a spike above this on that CPI data, and then after that kind of resolved itself, we were going to look to the downside, right? So trading from above 130.50, our risk being that 131.45. So our idea, right, our main idea, right, which is building out the idea, we didn't have set parameters on anything, was to go short up in this area here with stops at the high, and then looking to ride this cycle out. And in order to ride this cycle out, we need targets at least right down to 128.50. And then from there, we can even maybe look down at the support down here at about 127. So if we kind of just fast forward in time here, we could see a few things that happened. Bar replay can't be connected. Awesome. Why not TradingView? Right, so let's just come back here. This is the full playout. I'm sorry, the bar replay kind of spazzed out on us for some reason here. But you can see what we eventually got was the spike above here on that CPI data. And again, you can see down here, this is on May 11th, the following day. Right, CPI data came out, spiked above this high. Didn't quite hit the order block. Typically, we would have wanted to see that hit the order block. But as we can see, price came right back down into this zone and then gave us those selling opportunities, right? Price began to trade back into the range, and then from there closed nice and strong. And if you take a look, again, I'm going to just drop a horizontal line here, right? We can see that the volume that came in at this time here, right, was a lot stronger, right? The sellers, again, overpowering the buyers. Yeah, some buy volume came in, gave us exactly what we wanted, but those sellers still had control, and they have had control ever since they formed the sign of weakness, right? Just because they brought price up doesn't necessarily mean that buyers are in control. It just means that they're allowing price to move up so they can get better prices on their shorts, right? You don't actually need buying activity to bring price up. You just need a lack of sellers, right? And that's what they did. They stopped selling down here, they let price rise up, and they took advantage of those higher prices. So this was a beautiful case study. As you can see, it did play down into the support, broke that support, again, did so on increased selling activity, came back up to the areas of supply where they had previously. Let me just get rid of this real quick and show you, right, where the additional supply was out in this area. They came up, grabbed more supply, and we continued to play down into these support levels. And then ever since then, we've kind of slowed down. Some buying volume did come into the market here, but it is possible we still ride this idea to the downside, or to the very least until there is a new period of accumulation. So I don't want to go too in-depth with everything. I wanted to kind of keep this pretty basic, just showing off the effort to price action or the volume to price action divergences that were happening inside of this range. Again, it is a beautiful case study. You can absolutely go in here and kind of dissect some of this stuff a little bit further for those of you that have, that additional knowledge to do so. But it was a great example of a type 2 distribution on USDJPY. If you guys have any questions, comments, concerns about this, if you want to learn more, let me know in the comments. We can absolutely do some more case studies like this for you guys. With that being said, I appreciate everyone on here. If you did get some value, I do please ask that you guys like, subscribe, and maybe even hit that bell icon so you guys can see some more value in the future. Love and appreciate every single one of you. And with that said, this is Skaggs heading out, and I will see you guys in the next video.